Traders, welcome back to another price session trading lesson where we're going to understand how market moves and what rules does price session follow. Now today was one of those days where you pretty much have to take the good with the good and the bad with the bad, because today's price session was very difficult to read, market was very slow, and I haven't seen such a confusing price session in quite a while. So this is definitely one of those days where you have to practice your waiting skills, your patience, because you really didn't get much opportunities. It was quite difficult to read the market live, but there are going to be days like this every single year, and we're going to have to go through the price session regardless so we can understand how to navigate the price session. So we can see that the day started with a trend range structure. This is what you would see before the market opened. Clear trend range, no clear trend in either direction, flat EMA, a lot of price swings just swinging up and down through this EMA. But we can see that in this trend range, there is imbalance. Bullish imbalance, because each new low is higher than the previous one. We can see that this low is higher than the previous one, this low is higher than the previous one, and this low is higher than the previous one as well. Every single time prices are getting further away from this support. Especially you can see the imbalance here. Once you have a downtrend working lower, you would expect for prices to create second leg down, attempt for a new low of this downtrend to test the support, and this never happened. So once we see this is a bullish imbalance, which means the breakout may eventually work. We don't want to be fading the breakout if there is imbalance. So now that we have bullish imbalance, price is working higher, there's always a pattern working on a chart, and we want to follow the trend line rule. For this reason, we're always looking for the trend channels. Now when I was watching this live, I selected my channel like this, a steeper one like this, which got confirmed here. I had overshoot and a break here. But you can also draw a channel like this, where you get a little bit more confirmation at the very beginning of the session. You can see price is fitting really nicely. Either way, it gets you to the same place. You have an overshoot with the break and you're looking for new extreme. So it doesn't really matter much which channel you play. Either way, you can see that the price is for an overshoot. Now this is overbought territory, because getting a break below the uptrend of the trend line is normal. You expect new extreme, but if it breaks at the upper portion above trend channel line, this is overbought territory, and overshoot can generate stronger momentum in opposite direction, which means after you have an overshoot, you're far away from EMA, and this was steep move up, it can generate strong momentum to the fact that you can break the channel. So you can see that the prices are strongly correcting below EMA, and right now you have a new high, you have a first entry long, pullback, second entry long failure. Now you cannot really go short just yet. The bar is too big, the bias was bullish, the trend right now in this market is bullish, even though if it is a very weak trend, it is bullish trend regardless. So I don't want to go short just yet, but notice what happened next. This is the lowest low of this move down. We have a first attempt to sell, pullback, second attempt to sell. So this is a second entry short. And also this can be treated as a lower high, confirming this failed second entry long. So we have a new high, first attempt to go long, second attempt to go long failed, and a lower high confirmed it. And notice how great strong this signal bar is. Tier 1 signal bar, right off the exponential moving average, great second entry short. Because the overshoot generated a strong momentum in opposite direction. So you expect for prices to get at least to the bottom of this trend line, and also because price session likes to move in pairs of twos. This was the first leg down, so you expect the second leg down after you can see EMA rejecting prices from the other side and the second entry short forming. So you have a larger two-legged pullback, break of this uptrend, and a strong push above EMA. And notice another major swing low that is higher than the previous one. And this was a trend range, this was the resistance, this was the support. We broke, came back, and tested the key level. This resistance is right now acting as a support. It's holding, indicating that buyers are coming into the market. Strong push above EMA, confirming the bullish momentum. And here we have high-low confirmation setup right at the exponential moving average, confirming the bullish momentum. While according to trend line rule, we expect for prices to create new extreme for this initial uptrend. Like I said, I played it a little bit steeper like this, but it pretty much gets you to the same place. The reason why I choose the steeper one, because I don't like drawing large channels straight inside of a trend range. So this is where the main steep move started. So this is why I like drawing it a little bit later on. Either way, you're above EMA, which is confirming right now that you expect new high. Because if the downtrend is going to be strong, if the overshoot is going to be strong, the EMA is supposed to reject prices and you're supposed to be heading all the way down to here. The fact that you instantly pushed above EMA is giving you clear confirmation that this was okay, just a two-legged pullback, downtrend played out with the break new low, and the main bullish bias is kicking in. I waited for a failed second entry short, which never came. By the time I get a failed second entry short, it's way too late, it's moved too far up, and it never even really triggered about this bullish bar. So while we are expecting for prices to go to the upside to make new high, we're counting for longs, which means we're counting for failed second entry short, because sellers are going to get trapped taking a second entry short against the trend, or we can count for second entry long. Notice we have a large two-legged pullback here, and also we have smaller two-legged pullback here. First leg down, second leg down, and we have new high, first entry long, second entry long. And EMA keeps holding, so this is a confirmation that bulls are still strong because prices never really managed to close below EMA. This short-term channel needs new high, and even this main channel needs new high. Two channels needs new high, EMA keeps holding, but look how it formed bearish doji inside of this big bearish bar. It formed so ugly, I cannot really take it. Had this setup formed a little bit cleaner, would have been better. You can see two-legged pullback, but no real way for us to enter according to rules. A market formed new extreme, which we have wide double top. Uptrend played out, all uptrends played out, for the matter of fact. So right now we would be expecting bearish correction, and we can see that we have bearish leg down, but prices managed to quickly reverse above EMA. And by the time you get a failed second entry short, you're all the way up to here. And this is where it got really confusing, because we started the day with very weak uptrend, which right now played out. So why are prices running up higher like this? And this is why it got really confusing, because the prices really had no business of running up higher, but you need to trade the market you see, not the market you want. So I was looking for some additional pattern. I drew channel like this, but you can see the structure was too steep and didn't really fit the earlier price action, because you started with range-like structure, weak uptrend, and suddenly you have such a steep spike, which doesn't really fit that well. You can see it ended up reversing instantly. And here you can have also option to draw slightly wider channel. Notice if I'm gonna draw a wide channel like this, this is a possibility as well. But this channel I don't really like, and I don't think it's correct, because when you're drawing a channel, you always have to ask yourself a question if it makes sense and how strong the trend would look by the time it gets here. First of all, this was a weak uptrend to start the day with, and very little bars. This was a slow market. This was only 30 minutes after market opened. And you can see that this channel would be okay if you, let's say, had a strong bullish bias through the rest of the day, like we had on Friday. But this right here is very little price action, was too weak, and we only move higher 33 points. This is not a strong uptrend by any means. So once I'm drawing a channel, I'm asking myself, the channel has to make sense. So by the time we get all the way down to here, and because also every single channel you draw, you have to imagine how the channel would look after a break. So imagine you have a break here, and you expect for prices to create new extreme. Every single channel you draw, you expect for prices to form new extreme. This is what you, let's say, visualize in your head, how the new extreme would look. So if I'm going to draw a flat channel like this, I have to ask myself a question. By the time we get all the way down here and break the uptrend, is this going to be correction or a brand new downtrend? And you can see by the time you retrace all the way down here, basically the entirety of the uptrend, the downtrend is no longer just a correction, but it is a brand new downtrend on its own. And I'm going to show you guys a repeat pattern from a year ago. Take a look at this pattern where you have weak uptrend and a sudden steep spike up that managed to get reversed. Right, traders, here we are looking at the repeat pattern of price session a little over a year ago. And I remember when I'm watching this, I was confused the same way as I was today, because we started with weak uptrend that had range-like characteristics. This is typical characteristic for a weak uptrend where you have strong bearish pullbacks and it looks too sideways. And notice we started with weak uptrend and suddenly we had a strong bullish spike. Now on this day it was much easier because we managed to have a break and a new extreme, but you can see it acts the same way. There was a sudden bullish spike that was too steep, it didn't really fit the structure early on and managed to get reversed all the way down here. And if we draw a wider channel on a day like this, you can see that the prices, by the time you got all the way down here, the downtrend was too strong and prices could never really manage to get a retest. So for this reason, I really like sticking to the tighter channels overall. But when you're watching this live, you pretty much only see structure like this, where the prices are laying up higher. So you have to adapt. We have a new high, first entry long, second entry long, and downtrend played out with the break new low, and the EMA keeps holding. It takes one tick lower, trap all the sellers, strong reversal up, EMA kept holding, and this right here is a second entry long high probability setup because the downtrend played out with the break new low. Later on, we form a visual two-legged pullback. First leg here, second leg here. So you can see two-legged pullback here, two-legged pullback here, two-legged pullback here. Nothing is written in price action. We only had one leg here, but you can see this was the area where this really wasn't just a correction, but this is where the strong bullish spike started. So this is why there was only one leg, and it can even give you a hint. Okay, why there's only one leg? We have brand new uptrend starting, even though it is way too steep. We have visually two-legged pullback, and we have high low right off the key entry points, two of them, the trend line and the EMA. The signal bar is great, managed to work very well for a scalp, but at this point on, you're quite close to these highs. You're also in the middle of this trend range. You're going quite sideways, and it was just way too steep. So even though this worked really well, because you're so close to these highs, and you're in the middle of the trend range, and you probably feel like this was too steep, so it is too overbought. I'm not really going to mark it, although aggressive wise, not a bad setup at all, because you have two key entry points and a high low confirming new high, first entry long, second entry long. So it can be definitely a tempting setup. A tempting setup can even be the failed second entry long here, because now you have a nice, very strong push below EMA. You're right at the EMA, great bearish bar, and you have highest high, first entry long, pullback, second entry long failure. If we had to break a new high, this would have been easy to reverse a pattern, but because this uptrend is still in play, it just reversed on a dime. It's very hard to recognize the exact point where you want to go short here, because the easiest way how to recognize the trend is reversing is reverse a pattern. And this would be reversal pattern if we had a break new high, because the reversal pattern is characterized by two failed attempts in previous trend's direction, which we had. First entry long, second entry long, because previous trend was bullish, failed right below EMA, strong push down, but you also need to have a break in your extreme to be sure that the uptrend played out. So both of these setups can be considered, but they're a little bit more on the aggressive side. Now, by the time we get all the way down here, brand new downtrend started, which means we need to identify a channel which is easily identifiable. You can see how nice it's fitting off the top. And just like when the market is trending to the upside, you're looking for two-legged pullbacks so you can go long. Here we're looking for two-legged pullbacks so we can sell. So we have first leg up, pullback, second leg up. But this was the lowest low. First entry short, pullback, second entry short. That formed way far away from EMA, which we cannot take. And this is just a third entry short. Now, you can see, even though the second entry short formed here, you can reset the count. And why can you reset the count? Since this is the lowest low, you can see that this was the first leg and this was the second leg. Visually, this was the place where the first leg started after this big bullish bar. So this was just a little noise, and you can see this was the first leg here, pullback, second leg. Even though if this was a second entry short, we cannot take it because the signal bar was bullish. So if we reset the count and treat this as a second entry short, larger to like a pullback, if the signal bar is bullish and something is wrong with the second entry short, we can wait for a lower high confirmation setup. We wait for a lower high if something is wrong with the second entry. So we have two-legged pullback, but by the time we get lower high, it triggered below this bullish bar, too far from EMA, we cannot take it. We need to see it below bearish bar. But notice what happened next. New high, first entry long failed, second entry long failure, and also new low, first entry short, second entry short. And why are we looking for shorts? Because this downtrend need to get new extreme and going to trend line. So you can see EMA held once, held twice, two high probability setups in one, failed second entry long and second entry short, right off the EMA, strong bearish bar. Now, the bar is too big. So if you wait for bar to close, it's too low and the risk is quite big. The only way to enter this is engulfing, which is you see this bullish bar, you see tick higher, all the buyers are getting sucked in, they're buying too early because this downtrend is in play and it needs to get new extreme. So the trend is down, so you don't want to be going long just yet. And EMA kept holding, so once it ticks higher, reverses down, you can put your stop order below this bullish bar. It was too quick. I didn't get filled, and by the time the price is all the way down here, the scalp was already made. So you could have played it on engulfing. It worked regardless, but it is way too big after it finishes. But you can see two-legged pullback, double confirmation of the EMA, and the new extreme was formed. And what was the goal of prices? To reach the new extreme, to reach the low of the day. This is why we always try to identify the low of the day, because that's the target for prices to reach. We came out, I think, 1 tick away or 2 ticks away, but we can consider this as a test of the low of the day, and prices form new extreme. Followed by a strong push above EMA, and after there's a break new low, now we expect reversal pattern. Okay, because there's no longer a need for us to look for new extreme. We're coming off the low of the day, massive push above EMA, which is indication of bullish momentum. And if I want to predict the beginning of a bullish trend, I want to see reversal pattern, failed second entry short, but we don't have trigger here. There is no first entry short, so we only have first entry short failure. So this is only high low, but technically there was no trigger here, so this is kind of like a first leg here. So unfortunately this is just a high low. By the time I get a failed second entry short, you already reached new high, you're far away from EMA. There managed to be 2 more legs to new extreme. You can see we have first leg here, second leg here, and also this was the first leg, pull back, second leg. So this is going to be a great area where you can see that the market likes to move in pairs of twos, larger two-legged pullback and smaller 2 legs within. Uptrend played out, strong push below EMA, so what am I expecting at this point on? Failed second entry long, I don't even get it. By the time I get failed second entry long, it's above EMA. You get lower high here, which is too far down, so far away from EMA, and also small downtrend has a break in new extreme. So you would be entering after new low was already made and already formed too far down. You want to take lower high close to EMA. I was looking for failed second entry long, which never formed. Then you can see market continuing working higher. We have a new low, first entry short, strong push above EMA, second entry short failure. And here we have failed second entry short, which was tempting. I was considering taking this. I waited for prices to trigger above this bar, but prices never came back. Filled my limit order. After I saw 2 doji stalling, I decided to cancel, and I'm glad I did, because otherwise I would have been stopped. You can see by a couple ticks before eventually go higher, but I can mark it. I don't really want to cherry pick, but this is big of a bar. You're quite close to these highs, and prices were really slow. EMA is getting flat, so it is really sideways. It is really better to be patient here. Once I saw no momentum after trap, because trap is supposed to generate strong momentum, and I saw doji here, I decided to cancel my order, and there was another third doji, which I'm definitely not going to sit this out because the trap is supposed to generate strong momentum. It was really too slow, so I'm only marking this in case you took it as a developing trader, because it is a first entry short, second entry short failure. And right here you have the first leg here, so you expect possibility to get a second leg. I'm even going to use the closes so we can make it a little bit reachable. Yeah, this is much closer. And also you can see pull back, second leg here. So market truly likes to move in pairs of twos, and we even have first leg down, pull back, second larger leg down, where there are 2 bigger legs within, and the market reverse. So now that I cluttered the chart, we can see that we have a new high, first entry long, second entry long, but flat EMA. This uptrend needs to get new high. This is a little bit too congested. You even get a new low, first entry short, second entry short failure, which EMA keeps holding and you expect new high, but this is too congested. Flat EMA, prices form new extreme, larger two-legged pullback, strong push down, downtrend needs to get new low. You expect second entry short at the EMA, which you never get. Market just V-shaped reverse, and now you can see pretty much nothing to the close. This was a nice new low, first entry short, but by the time you get second entry short triggered, 5-6 bars stacked next to each other, you never really got second entry short below these bars. You only get it 4 bars later, so you have definitely some consolidation. No real great setup here. You may consider this lower high as a confirmation setup of the new high, first entry long, second entry long failure. Decent setup because it is right now confirming the trend line and the EMA. It is a tier 1 signal bar, so you have 2 key entry points. The downtrend in play, break new extreme. Here you would be expecting a great second entry short, but like I already mentioned, it never really triggered. It managed to form 5 bars before you got the trigger, and the trigger formed below this bullish bar. So unfortunately, no great second entry short to finish the day with. So as you can see, quite a difficult price action. A lot of these setups are fairly aggressive. No easy high probability setup, no gimme today, but that can happen. You guys can see the similarities from the price action example I showed a year ago. So it's interesting, the prices can sometimes look so similar, but I hope you had a decent trading day. If you practice your patience, this is definitely a good way how to approach the day's structure, because patience is required. It's something you have to get used to, because days like this, it may not happen tomorrow, it may not happen next week, but definitely a month or 2 months from now, there's going to be a similar day and you need to react the same way. If you're not sure, you just have to be patient, and the next day, they're going to be easy high probability setups. So good luck with your trading.